This is Horizon's Middle East and Africa, our top stories this morning. Tensions rise after an Egyptian soldier is killed during a clash with Israeli troops at the Rafah border crossing. Prime Minister Benjamin Netanyahu, meanwhile, calls the deadly airstrike on a Gaza camp for displaced people a tragic mistake. Our coverage continues in the lead up to the most hotly contested election in South Africa. We're live in Cape Town. And caution dominates trading in Asia ahead of a flurry of global inflation reports set to influence monetary policy. Well, good morning again. It's just gone 8 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai. Let's get you caught up on these markets. And of course, yesterday was a U.S. bank holiday, Memorial Day. So many of those markets were closed, thin trading. This is a look for S&P futures today, seen opening up in positive territory, up 0.2%. And this after a positive close for Wall Street on Friday. One thing that you want to note from a technical perspective today is equity trades. The settlement date is moving from T+2 to T+1. We're going to talk more about that on the show, but it could have an impact just in terms of liquidity and the mechanics of how trades are settled on Wednesday. So something to bear in mind for tomorrow. 10-year yields sitting unchanged at around 4.46% as we head into that very important inflation metric on Friday, that PCE number. We'll talk about that in a moment. Crude, we are seeing slightly higher this morning, up 1.5%, and that clearly on back of the geopolitical flaring up of tensions overnight and the last couple of days. And then dollar rands, we're watching this currency pair closely into the South African elections. Today, the rand is about 0.1% firmer versus the USD. We have rallied 6% since the beginning of April, but over the course of the year, trading flat. As for this core PCE measure, well, you can see from the charts here, the expectation is that the month-to-month print is going to decline when that figure comes out on Friday. The lookout for the rounded print, we're still looking at around 0.3% month-on-month, annualized 2.7%. But the point is, it is moving in the right direction. But of course, the big question for investors is how quickly this disinflationary process can continue. Just something to bear in mind as we head into Friday. Now, let's move on and check in on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Avril, what are you watching today?
Two things, what's coming out of China as well as Japan. Now, from China, we had Shanghai easing those home buying curbs. That's raising hopes that we'll see other top tier 1 cities do the same. Remember, home buying confidence has really been hit amid the fall in property prices. That's not quite helping what we're seeing in the CSI 300, still negative, but we did get a bit of a tailwind yesterday, remember, from the unveiling of a CHIPS fund, and tech is helping to boost the Hang Seng. We're seeing offshore yuan pretty flat against the greenback. Flip the board because I want to talk about what we're seeing on the Japanese currency as well. Today, we got services PPI that climbed more than expected. So it shows this broadening out in inflation, making the case for the BOJ rate hikes. And it seems across the assets that that is what investors are bracing for. Stocks are down. The Japanese currency pulling further away from 157. Still really weak, these levels, all things considered. We're seeing the selling coming through on Japanese bonds, particularly on 10-year, that yield still above 1%. Joumanna.
Avril, thank you so much for the overview. That was Avril Hong in Singapore. Now, tensions are ratcheting higher in the Middle East after an Egyptian soldier was killed in a clash with Israeli forces at the Rafah border crossing. It follows Israel's deadly airstrike on a refugee camp, which Prime Minister Benjamin Netanyahu has described as a tragic mistake. For more, let's bring in Bloomberg's Stuart Livingstone-Wallace. We are seeing a significant ratcheting up of tensions in the region, and of course violence in Rafah over the last 24 hours. We're seeing the response from the international community. Just walk us through the developments.
So we have 45 dead is the last count, but Israel is simultaneously saying that that airstrike took out 2 senior Hamas officials. So I think really the argument here comes down to, did it cross the red lines laid out by Biden? What implications might that have for further delays or a pause in the military shipments from the US to Israel? And I think ultimately that's where the leverage the international community has, because it's all very well to come out and condemn it and to send out a tweet, and that's great for your domestic audience, but it doesn't actually change anything on the ground. Simultaneously, you've got an Israeli government that is largely being led by a very sort of ultra-nationalistic ideology, and they're not really going to be paying any attention whatsoever to what the French president is tweeting or anyone else is saying. It's just not a concern to them.
Let me ask you, the backdrop is, you mentioned the leverage of the international community. ICJ ruling came out on Friday and essentially warned Israel to stop its military operation in Rafah. That didn't happen over the weekend. Why is it the case that Israel's just not listening?
Well, number one, the ICJ has no power of enforcement, which is rather tricky. Again, you can put out as many rulings as you like. If you have no way of enforcing it, it's kind of worthless. Also, Israel interpreted it in a very peculiar way. They interpreted that language as saying you've got to avoid civilian deaths. Now, it is then rather embarrassing several days later where you have a great many civilian deaths, albeit, again, they're justifying it to some extent, even though they called it a tragic mistake. They did say they were going after Hamas leaders. So again, yes, the pressure is building and so on, but does it necessarily change course or the course of things in Israel in terms of the Israeli decision-making? Probably a little, but maybe not enough to stop it.
I thought it was notable that in the afternoon yesterday, the Prime Minister Netanyahu came out and said that it was, quote, a tragic mistake that they're looking to investigate. But I do wonder whether internally within Israel, public opinion has started to shift and is moving against the continuation of this war.
I think yes, but for different reasons. In other words, I think the focus now, again, once more, is back on the hostages. And we don't know exactly how many are left, probably in the order of around 100, something like that. But also, I think, what comes next? What is the future? They find themselves in a very precarious position internationally. And I think a lot of the Israeli public have found it quite difficult to absorb that in terms of how the rest of the world now views them. They started off October the 7th with a great tragedy, and then in the ensuing months, the war has really turned things around, and I think that makes it very difficult for them to see what is the future. What does potentially a Palestinian state look like? Should it exist at all? Is it even a feasible outcome?
Yeah, important question. Stuart, thank you so much for joining me today on the show. Bloomberg's Stuart Livingston-Wallace. And joining us now is Hasan Alhasan, IISS Senior Fellow for Middle East Policy. Thank you for joining us this morning on the show. You probably heard my conversation with Stuart just now. Read the intensification of the violence over the weekend. Do you think this is going to prove to be a pivotal turning point in the war in terms of Israel's ability to engage in further attacks on Rafah?
Sadly not, because I think there continues to be an overwhelming international unwillingness to impose real costs on Israel to change its behavior. The ICJ ruling has ordered, or the ICJ has ordered provisional measures that essentially require Israel to stop its military operations in the Rafah part of Gaza. The UN Security Council had approved a resolution, 2728, again urging Israel and requiring Israel to work in earnest towards a ceasefire. And yet Israel continues to violate all of these orders and all of these resolutions with significant impunity. So the European measures the measures by some European countries, Spain, Norway, and others, to unilaterally recognize Palestine as a state are symbolically significant because they represent a change in long-standing European position on the issue, but they do very little to impose real costs on the ground. And I think the US has continued, obviously, to shield Israel from broader criticism or real action to impose consequences and get it to change its behavior.
Yeah. Hasan, I want to put to you something that my colleague Stuart mentioned, and that was the fact that it's all very fine and well for these leaders of the West to put up tweets expressing their condemnation, their outrages at what has happened. But at the end of the day, it's still the U.S. that have leverage with Israel. And one way that they can exercise that leverage is by pausing shipments of military aid. Do you see that happening?
Well, that's right, in the sense that the U.S. has the greatest amount of leverage over Israel. It's absolutely critical to Israel's warfighting effort. It provides a lot of financial and political support to Israel. It vetoes UN Security Council resolutions taking aim at Israel. And so most definitely the United States has the greatest amount of leverage that it can use to compel Israel to change its course of action in the Gaza Strip and to show greater respect for international law. But clearly there isn't the political willingness to do so. However, that doesn't mean that Europe is out of options. There are a dizzying amount of European sanctions on countries like Russia, countries like Iran, And so there is a broader toolkit that can be used to bring more pressure to bear on Israel. And clearly, I think all efforts to reason with the current Israeli government have very obviously failed by the recognition, including of senior European officials like Joseph Borrell. And so I think there nevertheless is a lot of room in Europe's toolkit that it can use. And so I think, yes, the US is obviously the most important partner, but I don't think Europe has exhausted all its options in trying to change Israel's behavior.
So, Hasan, this war has been going on for almost 8 months now. And originally, the Israeli forces had 2 stated aims. One of them was to bring back hostages. The other one was to neutralize Hamas. And we know around 112 hostages have been returned out of 240 expected. But Hamas are still, by and large, very present. Yes, some senior leaders have been killed throughout the course of these attacks, but many of them are still present. They have not been neutralized. Bigger picture question, how does Hamas get neutralized?
Well, I don't think that's necessarily an achievable aim. It's, I think, clear that Hamas has so far been quite successful at denying Israel the strategic victory in Gaza that it seeks. Its leaders, by and large, especially the most senior echelon, is still very much intact. Hamas continues to resurface in areas that had previously been cleared by the Israeli military. It continues to be able to mount complex operations using drones and other equipment. And I think very significantly from the political, psychological perspective, it continues to be able to launch rockets deep into Israeli territory, including a few days ago, rockets reaching the Israeli capital, Tel Aviv. And so I think that sends a clear message that Hamas is here to stay, that it's going to be very difficult for Israel to totally eradicate Hamas. And I think the world no longer accepts or is increasingly, I think, unwilling to accept the Israeli premise that anything goes and at any cost, Israel will try and annihilate Hamas, no matter the humanitarian fallout and no matter the consequences to Palestinian civilians. The point, I think, that's also worth mentioning here is that because of Hamas's resilience, it's becoming, I think, increasingly obvious that the 2 objectives you referred to, annihilating Hamas and liberating the hostages, cannot be achieved simultaneously. Israel will have to choose whether it is serious about liberating the hostages, which I think the Netanyahu government so far has shown it is not, or if it wants to continue to pursue what I think is an ultimately unachievable objective of totally eradicating Hamas. Because Hamas has shown a lot of resilience, it's shown its ability to resurface and to continue launching attacks into Israel.
Hasan, I don't want to let you go before asking about Iran. There was a report, I'm not sure if you've seen it overnight, but very significant. According to this report that was seen by Bloomberg, IAEA inspectors say that Tehran's stockpile of highly enriched uranium rose 17% over the last 3 months, which means that should they want to use it for economic warfare, they probably do now have the capability of doing so. How threatening is that to the rest of the region, especially in light of the latest Iranian developments, the upcoming presidential elections? How closely should the international community also be watching what's happening in Iran right now?
Well, quite closely, but I don't think it's surprising that Iran feels the need to stockpile uranium at the moment. Iran has been flaunting, I think, its rules of engagement with the IAEA, has been rather uncooperative of late. But I think that reflects Iran's own concern and its own threat perception vis-a-vis Israel. So let's not forget that Iran has been engaged in a shadow war for Israel. And then quite recently, in the context of the ongoing war in Gaza, that shadow war has boiled over into the surface and has materialized into a round of direct strikes at one another. So I think the stockpiling of uranium on the part of Iran is intended to signal that Iran feels threatened and is willing to take very serious measures to ensure and guarantee its security. I think there are American efforts to engage in indirect talks with Iran via Oman. We know that 2 rounds of talks have taken place one in January and one earlier in May. So there is a U.S. effort to try and contain this and to try and de-escalate the situation. But I think the notion that Iran is stockpiling uranium is, I think, very much intended to send a signal on the part of Iran, and I think reflects the increase in tensions and threat that is, I think, characteristic of the current situation in which the region is in because of this ongoing war in Gaza.
Yeah. Hasan, we're going to leave it there. Thank you so much for joining me today on the show. That was Hasan Alhasan, IISS Senior Fellow for Middle East Policy. Still ahead on our show, with South Africans set to vote tomorrow, we'll get the business view on an election that could see the ruling ANC lose its national majority. This is Bloomberg.
You hear also, certainly at the beginning of the year, the cuts are coming. And that gives the market hope, which then makes financial conditions easier, which makes the Fed's task harder. So I would stop talking about rate cuts at this point and say, well, we'll do it when we do it.
That was former Reserve Bank of India Governor Raghuram Rajan questioning the Fed's messaging on rate cuts. So for more, let's bring in Mansoor, Mohi-uddin, Chief Economist at the Bank of Singapore. Good morning to you, sir. Let me just start off by asking you what you make of all of this questioning vis-a-vis the Fed's next steps, when they're going to cut, the dialing back of expectations, only for them to be ramped up again based on, one data print of CPI. Is there too much volatility around the Fed's rate cut expectations?
Yeah, I mean, the volatility is obviously being caused by the data. If you think about the start of this year, when the Fed was signaling that they wanted to start cutting interest rates, the markets had 6 to 7 rate cuts priced in for this year. But in the first quarter of this year, the inflation data didn't go in that direction. That caused the markets to scale back their expectations. We've had a better report in April on the CPI numbers that have helped the markets reprice in rate cuts. But it's difficult for central bankers. They keep on telling us they want to be data dependent, but that obviously then causes the volatility that we're seeing now in the markets as the data swings around.
Do you get the sense that the Fed are perhaps more highly sensitive to inflation downside surprises than potential inflationary risks? Is there an asymmetry in terms of the Fed's response to the data that's coming in?
I mean, I think that's the criticism that Dr. Rajagan just made there, where he's obviously saying, look, the Fed shouldn't be speaking so much about rate cuts now because the data isn't there to justify that. And he's probably right at this stage. What the markets are looking for is not just the next few months, but the next 6 to 12 months. If you think about the longer-term outlook, it is likely that the Fed is going to be cutting interest rates. The Fed do need to signal that, even if it's not going to be imminent. The problem for the Fed is that the data isn't giving them what they call greater confidence to signal rate cuts yet. And so the markets keep on chopping and changing between strong data to weak data, back to strong data.
What do you think the market would like to see in terms of not just the timing of the first rate cut, but how many subsequent rate cuts happen afterwards? If it's one and done, obviously that would be a disappointment, I would think. But what do you think that sweet spot is?
I mean, markets obviously like rate cuts, so the markets would like to see as many rate cuts as possible. I think the key point here is that in the interim, we do need to see the inflation numbers moderating. So you said earlier about the PC numbers that are coming up on Friday. So the markets are hoping that the rise in core PC prices moderates to about, say, 0.2 to 0.3% a month. If we get down to that range over the next few months, then the Fed can signal that it's willing to start cutting interest rates. If the numbers continue to slow down, then the Fed can start cutting, say, at least once a quarter. Not every meeting, but once a quarter. So that's once every 2 meetings. That would definitely then encourage financial markets. You'd see stocks rally again. You see bond yields come down. You see commodity prices increase. But that probably a quarterly pace of rate cuts is a sweet spot that investors would like at the moment.
Yeah, interesting. Let me ask you if you have a view on where 10-year yields could go. And I just wonder if the Fed do start cutting interest rates, alongside that, the market has to believe that they've got a firm grip on inflation. Because if the market doesn't believe that inflation is headed back to 2%, you could still see upward pressure on yields. Where do you stand on that debate?
That's absolutely right. So we do need to see the inflation data first moderate to allow the Fed to start embarking on a rate cutting cycle. We think that's going to happen. We've got 4 more inflation reports before the September FOMC. So as long as those inflation numbers get back into a range of showing core prices rising by 0.2 to 0.3% a month, rather than the 0.4% a month they have been averaging in the first quarter. So if the range of increases moderates, then we think the Fed can signal clearly that it's going to start cutting interest rates at the end of Q3. That would then allow 10-year yields to fall. At the moment, they're stuck in this range between 4.25 to 4.75%. Would expect that range to go down probably by at least 50 basis points. So then you'd see the markets pricing the 10-year yield between, say, 3.25% to 4.25%. And as long as the Fed can carry on cutting interest rates every other meeting, then, yeah, yields would be able to go through 4% back to the end of last year. So we think 10-year yields about 3.75% is a reasonable 12-month forecast.
Okay, all right, that's a good place to leave it. Then you would be buying fixed income here. I know you're a chief economist, not a strategist, but that's one of my takeaways from our conversation. Mansoor Mohi-uddin, thank you so much for joining me today, chief economist at Bank of Singapore. Also coming up, we are going to be live from Cape Town as South Africans prepare to vote. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. A look at some of the stories we're following from Asia this morning. U.S. lawmakers visiting Taiwan have expressed support for the island's defense and say Washington has to provide deterrence. They're the first American politicians to meet Taiwanese President Lai Ching-te since his inauguration last week. Their visit comes just days after China wrapped up its largest military drills in a year around Taiwan. And North Korean state media says a rocket meant to put a reconnaissance satellite into orbit has exploded in mid-air. Video provided by South Korea's military is said to show the rocket breaking up in a fireball after its launch on Monday night. It is a setback for leader Kim Jong-un, who went to Russia last year seeking help to place an array of spy satellites into orbit. And coming up, we're going to talk more about the South Africa's election. We'll be right back. This is Horizons Middle East and Africa, our top stories this morning. Tensions rise after an Egyptian soldier is killed during a clash with Israeli troops at the Rafah border crossing. Prime Minister Benjamin Netanyahu, meanwhile, calls the deadly airstrike on a Gaza camp for displaced people a tragic mistake. Our coverage continues in the lead up to the most hotly contested election in South Africa. We are live in Cape Town. And caution dominates trading in Asia ahead of a flurry of global inflation reports set to influence monetary policy. It's just gone 8:30 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai. U.S. markets are back from Memorial Day, so all eyes will be on the open for S&P futures. You can see we are trading about 0.2% firmer. This after more solid close on Friday. A technical note that we've been talking about throughout the course of this show is that going forwards, well, as of today, equity trades are going to be settled T+1 in the U.S., no longer T+2. That could have ramifications on some of the settlements and liquidity issues in the market over the course of this week. So something to bear in mind just from a technical perspective. 10-year yield sitting at 4.6%. We have the crude sitting at around $79, but are seeing a bit of an uptick for the price of oil this morning, up 1.5%. This with the flaring up of the situation in Rafah overnight. We have been talking about that on the show too. And then dollar rand clearly in focus ahead of the start of those South African elections. Today trading 0.1% firmer versus the USD, about 6% firmer since April. bit around flat on the year. A quick look at that core PCE chart. That is going to be the major event for U.S. investors on Friday. And the anticipation is that the month-on-month print is going to slip. On a rounded basis, we could probably end up at around 0.3%, though 0.2% is a possibility as well. Though you can see that the course over the last few months is one of disinflation. And so if that disinflationary path is intact, clearly that raises again the possibility of the Fed being more assertive when it comes to Fed cuts. Hence why it's going to be a big event for the global investment community on Friday. Now, speaking of, let's check in on how markets in Asia are faring. Avril is in our Singapore studio.
Yeah, we're seeing Asian investors really watching out for that data on Friday on the Fed's preferred gauge of inflation, but also we're going to get China PMIs that day. So in terms of data, a lot to look forward to. But in the meantime, we have some positive news in the way of China's chip fund, $47.5 billion being set aside. And we're hearing how the major banks are investing in the fund. They're going to account for about a third of this. So the chip stocks that rallied hard yesterday, most of them are extending the gains today. That is one of the sectors we're keeping an eye on in China, but let's flip the board as well and take a look at what we're seeing in the Chinese property names after Shanghai relaxed those home buying curbs. The hope is that other tier 1 cities will do the same. So the gauge of the developer stocks listed in Hong Kong seeing very slight gains today. That's because we're seeing the Shanghai-based property developer stocks rising, but apart from that, you're actually seeing a lot of the developers still in negative territory. It gives you the sense that while this might help sentiment and boost confidence in the margins, it's not quite enough given how deep the property woes are. I think investors need a lot more convincing here. Joumanna.
Avril, thank you so much for that overview. Property stocks once again in focus in China. Now, South Africa is heading into its tightest election since apartheid ended in 1994, and the ANC is facing competition like never before. Former ANC lawmaker and political analyst Melanie Verwoerd says the ruling party is losing support in key provinces.
They lose it everywhere across the country. They have lost from their base support, which is mostly, of course, African support, black South Africans. But in particularly in KwaZulu-Natal, they've lost a lot of votes because, of course, of Jacob Zuma and the MK party. That is the second biggest province in South Africa in terms of voting numbers. And then they've also lost a lot of support in Gauteng, which is around Johannesburg, which is the biggest province in South Africa. And that hurts them.
But the country is enjoying a rare streak of uninterrupted electricity right before tomorrow's vote. The ruling party has been successful in keeping the lights on for more than 50 days. But this is drawing more suspicion than praise.
South Africans have been used to this. Dinner by candlelight, pulling up to traffic lights that go dark. All due to frequent electricity cuts that have disrupted lives, impacting economic growth and prompting criticism from mining companies to retailers. Just last year, the power utility company Eskom could only keep the lights on for the equivalent of 82 days. But with an election on the horizon, South Africans have been enjoying a rare streak of uninterrupted electricity supply. Opposition parties have used the power crisis as fodder in the run-up to the poll, and now voters have become suspicious as to what lies behind the sudden recovery. Nearly 2/3 of South Africans said they'd consider not voting for the ruling ANC because of power cuts. Perhaps it's no surprise then that the government is trumpeting this winning streak. But the improvements have come at an environmental cost. The state has quadrupled the amount it spends on diesel to run emergency power generators. Still, though, the government insists the improvements are due to an increase in green power, including solar, through a public-private partnership. What they haven't said, though, is for how long the lights will stay on after the election.
That is the key question. How long are those lights going to stay on once the election is over? Let's bring in my co-anchor, Jennifer Zabazaja, who obviously brought us that package and is still in Cape Town with a guest.
Yeah, good morning to you, Joumanna. I'm standing by with Robert Hersov. He is a South African entrepreneur and investor. He spent 30 years overseas, has come back to South Africa 7 years ago, and is very primed to talk about the state of this country right now. Rob, I want to start here with a quote you said. You said the ANC is sick and dying, but the brand is still strong. We're 24 hours out from this election. What is the ANC brand right now?
So the ANC brand, they're still trying to play the game of the liberation movement that saved the country in 1994 from apartheid, that brought the Rainbow Nation together. And to be fair, they did a very good job for the first 10, 15 years of their rule, but they've been in power for 30 years. And for the last 10 years, they've done nothing but take this country into a downward trajectory. So the brand is still strong. The ANC is in ICU, but is not dead yet.
But Rob, Joumanna was just talking about how we are seeing some of the ANC's recent reforms bearing fruit. We haven't had load shedding, electricity outages for the past few weeks. Some of these fiscal reforms are seen as positive. Why shouldn't investors then be convinced?
ANC created load shedding. The ANC created the electricity supply problem in this country, and they're pretending they're fixing it now. The only reason that there hasn't been load shedding for the last 2 months prior to the election, unsurprisingly, is because the economy is not growing, so there's no demand on the electricity grid by the economy, and the private sector, private individuals, small and medium-sized enterprises, and large corporates have invested a huge amount in renewable energy to make sure that they have redundancy in case of load shedding. So the government has actually done nothing to help this country in load shedding. The ANC has actually created the problem, and they're pretending they're fixing it just before the election.
How do international investors, how should they perceive this, though? Because clearly there's an opportunity, right, to invest here in South Africa.
Is there? My worry is that the ANC is actually continuing to put this country into a zero growth environment, push socialism upon us, build unaffordable systems like the national health insurance, which we cannot afford, which Ramaphosa just signed into as an act. And I think the ANC is just going to continue to destroy what is left of this economy. We are at 0% growth right now. They are useless and they are a destructive force, and we need to get rid of them. But unfortunately, in this election tomorrow, they will probably come in the low 40%. And then the question is, who do they form a coalition with? And that's the very worrying thing, because there's some not good options.
What do you think the best case scenario is, though, for the economy in particular?
The best case scenario is for the ANC to disappear off the face of the earth.
But we know that they're not going to do that. So,
correct.
what is it investors should be looking out for?
Well, if the ANC is less than 40%, and they cannot form a government with the radical left EFF, the racist and radical left EFF, then they'll be forced to pull together some of the center-right parties into a coalition. And even though that probably will slow the trajectory downwards, it won't stop the trajectory. So having the ANC even in as a 33 or 42% partner in the next government is still a very bad thing.
How are you positioning ahead of the election, Rob?
So there's a concept called state proofing that has been introduced a number of years ago, but has caught the national attention, at least for the opposition. And state proofing is protecting yourself against the actions of the government. And it's quite depressing when you think about people and companies having to do that, to state proof yourself. It's have your own electricity, have your own water supply, try and have your own security, try and educate your children privately, try and have private medical, because the government cannot provide these services. They're incompetent.
What about, financially, though? Because we know there's a lot of capital sitting on the sidelines waiting for the outcome of this election. Financially, how are you positioning ahead of this?
So I always say that if a Martian had a look at the Earth and wanted to commit an investment to the world, what percentage would they commit to Africa and what percentage would they commit to South Africa? And my view is they'd commit nothing to South Africa. Why invest in an environment where you have a moronic, destructive, incompetent, kleptocratic organization like the ANC?
But you're still invested in the country.
I live here. I have money here that I can't take out. And I'm based here and I'm not leaving. So I'm going to try and make the best of it, but I'm going to protect myself by having the majority of my assets overseas.
So for the, if we're talking about FDI, it's declined over the past few years, of course. After May 29th, how does that turn around if we are still to see an ANC majority? Because that is a likely outcome.
So if the ANC are in coalition with the EFF, there will be no foreign direct investment.
You believe it will start to decline?
It will disappear.
Okay.
No one in their right mind would invest in an ANC-EFF government in this country because the EFF, in particular, want to attack property rights. There's a bill called, listen to the words of this, expropriation without compensation. Why don't they just say stealing? There's black economic empowerment. Also, theft. It doesn't work. Even Mbeki...
But they gave a lot of opportunities to a lot of black people in the country.
And they destroyed a lot of the economy too, because they put people into positions of power, cadre deployment, and put people into big stakes in companies who weren't capable of delivering the services that they promised.
So potentially, Rob, who makes the difference? Later on today, we're going to have the finance minister here. We were just speaking about him. Could he potentially be a change for this country, helping the ANC? What's the silver lining potentially here?
It's hard to look for one. The silver lining is that and it would make me sick, but it is a silver lining. It was the ANC to team up with the Democratic Alliance, the main opposition. So the Democratic Alliance is a pro-West, pro-capitalist, pro-democracy, pro-rule of law, and have proven very good governance party. So if the ANC were to fall to just below 40%, they would have to team up with a party like the Democratic Alliance that will get in the high teens or low 20s. And that would be a silver lining, because I would think the Democratic Alliance would take certain positions in the cabinet that would allow us to slow the decline of this country.
All right, we're going to have to pay very close attention to that. Rob Hersov, thank you so much for your time. Joumanna, back to you.
Very interesting, Jennifer, to hear what he had to say, particularly in light of his criticism of ANC, which has been the ruling party since 1994. That was my co-anchor, Jennifer Zabazaja, speaking to Robert Hersov, a South African entrepreneur and private investor ahead of tomorrow's election. Also coming up on our show, the world's largest oil exporter, Aramco, is considering a secondary stock offering. But what could this mean for the Saudi economy? That is a conversation that's coming up next. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Well, EFG Hermes says Saudi Aramco could see $1 billion of passive inflows if a significant secondary share sale goes ahead. Now, joining me now is our equities reporter, Farah Al-Bahrawi. We are teasing what this secondary share sale is, but I don't think anyone needs to guess what company we're talking about. That's Aramco. There was a story circulated last week that Aramco was considering another share sale as soon as June. So what do we know, and how did the stock react?
Well, the stock and the market in general took a little bit of a dip following the news of a potential $10 billion secondary share offering in the market, because that will require a lot of liquidity from investors into this new offering to support it, Joumanna. So we saw a little bit of a dip on that side. But yesterday, what was interesting is EFG Hermes, like you said, expects $1 billion of inflows at least if a $10 billion share offering proceeds. And that would increase Aramco's free float by 0.5%. Where does this money come from? It's passive investors tracking the MSCI and the FTSE indexes. And this money won't be redistributed from the Middle Eastern names on those indexes, but rather across all names on those benchmarks. So there won't be much of an outflow from other Middle Eastern names.
Let's take a broader look back at the Tadawul index, because it's interesting to see that it's actually lagging many of these MSCI indices this year. What do you put that down to? Is it just the oil effect?
Well, that's one part of it. And then you have the geopolitical risk that's happening in the region at the moment. Then the other part is there have been reports, and Bloomberg has reported that NEOM, which was which is currently a major project in the government that has boosted a lot of sectors over the past several years, that's being scaled back. So with that, you've seen a little bit of an impact across different names on the sector as well. And again, the IPOs, Aramco's secondary share offering, investors are keeping liquidity on the sidelines so they can reinvest that money into those new listings.
So another equity story on my radar, Abu Dhabi's largest company, IHC, have announced that they're considering of going ahead with a $1.4 billion buyback. What is the rationale for that?
Well, we have an international holding company considering that $5 billion dirham buyback, $1.5 billion. That is to sort of revive the stock once again, Joumanna. IHC, if you look at the chart over the past 5 years or so on the terminal, it sort of jumped 43,000% and then kind of tapered off.
Right.
So they're looking to see whether that could boost the share price. And at the same time, they say that they see significant value in IHC's future. So they want to reinvest a lot of their cash into their own company.
How much of that is their desire to give some money back to Emirati nationals? I was reading a statistic saying that 90% of the stock is owned by Emirati nationals to begin with.
That's correct. So a large part of this company, like you said, 90% is owned by Emiratis. It is chaired by the UAE National Security Advisor, Sheikh Tahnoon bin Zayed Al Nahyan. So they are saying that this is a reward to shareholders that might have not seen the stock price jump over the past 2 years or so.
Okay. Well, two things we're going to keep an eye out for. The Aramco one obviously could be quite interesting. Come June, Farah Al-Bahrawi, our equities reporter. Thank you so much for joining me today. Now, much of South and Southeast Asia have been sweltering under a severe heat wave, one that has caused power outages and deaths across the region. It's a problem aggravated by a changing climate and poor urban design. Bloomberg's Paul Allen has more.
For 2 weeks now, Karachi's 15 million residents have been baking in a heat wave. Temperatures in parts of Pakistan have been nudging 50 degrees Celsius. That's 122 degrees Fahrenheit. Surrounded by concrete, which stores and radiates heat, Karachi has become a giant oven.
Basically, we have turned Karachi into a concrete jungle, and I think green cover of Karachi is hardly 5%.
Hospitals have been treating hundreds of patients for heat stroke, keeping them cool made more difficult by frequent power cuts as the electricity grid buckles under the demand. It's a crisis that ignores borders. In neighbouring India, rivers in Maharashtra state are dry, wells are running on empty, and farmland is parched. The only point in pumping this well is to illustrate how nothing comes out of it. A typical farm worker here earns about $4 per day. At the moment, all they can do is helplessly watch as crops die.
I will not allow my children to join this profession because I believe farming cannot be enough for our monetary survival.
The brutal conditions are being felt in much of Southeast Asia as well. Rice planting in Thailand and Vietnam usually starts in May. A water shortage is stalling that and is part of a longer-term trend.
The next few decades where the temperature will be increased around 1 up to 2 degrees Celsius. The rice production will be dropped around 10 up to 13%. Thailand will be export less amount of food to the world market, and that will have the implication to the global food security.
India, Pakistan, Thailand and Vietnam are the world's top 4 rice exporters. The parts of the world dodging this heat wave now may not dodge the consequences of it. Paul Allen, Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Well, markets are preparing for the dawn of the T+1 rule, which begins in the U.S. today. It means stock trades will now settle in 1 day rather than 2 for the first time in 100 years. So for more on this, we're joined by Bloomberg's Kriti Gupta. And Kriti, walk us through what prompted this change in the settlement period from T+2 to T+1.
Well, Joumanna, it's a little bit of deja vu here. It goes all the way back to the 1920s, where I'm not going to give you a history lesson, but basically you did see so much volume, so much retail activity in the stock market, even way back then, that you had to actually close down the settlement times. It's the same story almost a century later. Back in 2021, of course, we know that meme stock craze had to have so many people, especially international investors, kind of caught on the back foot because of it. And they really didn't have that settlement time to catch up. That's now prompting, of course, perhaps a little bit more efficiency, but not without its own teething pains.
Kriti, many people are saying that tomorrow could be a key or potentially problematic day for settlement because you've got the T+2 trades from Friday settling, but then you also have the new T+1 trades from today. How could that impact markets, do you think?
Well, it's a real litmus test for whether or not this is going to be a secure system, kind of getting all the kinks out of the way. I should also add, on top of that, this week you also have the MSCI Balancing Act, I should say, rebalancing in the funds around the world. So on Friday that happens as well, where you do see a lot of that exposure. So it's kind of, again, two litmus tests, but again, this is where you're going to see all the kinks kind of come out and hopefully get adjusted, especially with the FX trades as well.
Is the feeling that market participants are ready for this? I know it's been in the works for a couple of years. D-Day is finally here, but are market participants signaling that they're ready for the adjustments?
They're kind of holding their breath, making sure, or hoping at least everything goes well, but they have prepared for us. Big cash cushions, for example, some of their staff working long hours, in addition, of course, to some of the operational and technical glitches getting handled ahead of time. It's that kind of prompting that they're worried a little bit, again, about teething pains, but they're saying anything that does happen, anything that does go wrong, it will only be temporary, but it may require a little bit of a liquidity injection before everything shakes out.
Makes sense. Bloomberg Markets Today anchor Kriti Gupta, thank you for joining us on our show. All right, a quick look at equity futures before we head out. The S&P is seen opening up in positive territory. Treasuries trading sideways, oil seeing a bit of a boost, and that is the picture for European futures as well, 0.2% firmer. That is it for our show today. That was Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.